Hello everyone and welcome to the Outspoken Market Global. Leandro Guerra is speaking, and at the moment I may look like just another guy in the internet with a Bitcoin chart trying to tell you what to expect for Bitcoin into the year ahead, 2026. It's not the case because while many people are going to guess what is going to happen, whether it's going to be up or down, and they will try to find justifications with the global liquidity, with the cycles, with the next halving approach, or whatever, the treasury companies and things like that. We don't pay attention to those things that nevertheless they are part of the daily or the day business as usual from Bitcoin. What we are going to do is pay attention to the information contained into the Bitcoin options prices. Better saying, into the Greeks that we can find in the options. Now, there is another class here on my YouTube on which I teach about the Greeks, about options, and about gamma exposure. Please, if you don't know nothing about these three subjects, I strongly advise you to watch these classes so you can understand what I'm doing here with you today. Now, if you will look particularly to that data, and here I am selecting, as you can see, don't worry if you don't understand the numbers, I'm gonna explain everything. So here I am analyzing the snapshot that I have from today for all the expiration dates starting from tomorrow, December 31st, up to the 27th of February next year. So we are speaking about the next 7 expirations dates that are available at the moment. Now, why is it important? If you pay attention, it has been a while already, since mid-November, that we are into this range, somewhere between 85, 84, and 9 something. And we are going nowhere. And the expectation, at least with the data that it's available today, and we revisit that same analysis every single day, and you can find it for free on the All Morning newsletter available at om-qs.com. You go over here, left hand side into the Quant Lab, go to the blog, and you search for the newsletter. Everything is in here for you. So when analyzing exactly that information, what we can see? We can see that the short-term expectation, it's yet bullish because the put-call ratio, meaning the open interest of put options and call options, it's 0.71. Whenever this number is below 1, it means that we have a bullish sentiment, and we may have room for a speculative upside activity. If you will look to the volatility skew for these expiration dates combined, we are essentially balanced. So no big things expected from this side. Now, the relevant information is the following. At the moment, it's visible. You don't need to be an expert to take a look in the past and say that, yes, we are in a low volatility regime. Yes, that's true. But when you don't want to rely essentially on what you are seeing, then you go to the data, and the data, yes, is telling that we are at the moment at low volatility. Now, we are going somewhere above 100K, maybe not in the short term, not with the reading that we have at the moment. If we look to the top 4 support zones and resistance zones, we can see that the strongest support zone, it's placed there around $80,000 for one Bitcoin. It's very strong, with the highest gamma exposure that we have at the moment. In the other way around, we have 84, 86, and 85. So it's essentially the range that we are seeing, and they are very much strong. So that is the reason that we are not going down at the moment further or below these levels. The resistance zones, in the other hand, they are, which the strongest one being the 90K, followed by the 92, 94, and 95. It means at the moment we are trading here at 87.6K. If we want to go anywhere further 90K, we need to overcome this 1.2 billion that we have of a gamma exposure into that particular strike. Then we must overcome 92 and then 94 and then 95. Just do the math. It's not complicated, right? So there are a lot of work to be done if we want to go over 95K. In the other way around, going down, yes, it's somehow yet difficult. We have, between 86 and 84, we have also strong levels, with the strongest one after that being 80. So this is essentially the range that we have noticed and we are observing daily on Bitcoin prices, which is different, for example, from this very short term, from this intraday analysis I have for the gamma exposure. Now, on these numbers and levels that you are seeing in the screen, this is the reading for 1 day to expiration. So today it's the 30th of December, so we're speaking about tomorrow, December 31st, and 2 days to expiration, the 1st of January. And we can see the call walls and the put walls for these expiration dates. They are pretty much aggregated here between 89 and 87, with the put wall for 2 days to expiration down there in 84. That is our resistance level that we have over here. That it's not necessarily the strongest, but it's the support level, not necessarily the strongest, but one of the top 4. This may change every day, of course, because tomorrow these walls, 1 DTE and 2 and 1 DTE put and call walls, they're going to expire. This is going to be replaced for new numbers, and essentially this is where the Bitcoin price is going to be. If we today, for example, we already touched it, the expiration was 9 a.m. Central European time. After that, we got the reading. The maximum of these trading days starting at 9 a.m., let's put that way, was exactly the call wall for 2 days to expiration and the put wall for all expiration dates by the end of February 26. It was precisely there. We got a rejection and we are moving down. There is a high probability that we are going to touch this wall, face some support over here, and if we lose that level, all the way down to 84. Again, this is the very short-term reading. For February, this is what we have to observe. Now, Leandro, I want to go a little bit further. I want to think about the rest of 2026. Can we do that? Yes, we can. Of course, the further you go, more, let's say, unstable it's the data, because a lot of things can change. Politics may influence, and many other things, economic scenarios and things like that. So the reading, it's weaker than the one from the short term. However, it's yet somehow valid, because nevertheless, the market prices future expectations. Having the reading of the centroids, or the center of mass of all gamma exposures for all strikes up to December 25th of 2026, so essentially, to simplify, 1 year from now, with all the data available, if we look to the gamma weighted centroids, the expectation is extremely bullish. But not before February 27, as we already have seen, even if we change the type of the reading, looking at the gamma weighted centroids, we are not going anywhere above 100K. Again, I have to emphasize this. This is the snapshot from today. Tomorrow we'll do another one. On the 1st of January, another one. And every day I will be doing another one. So we can follow the market sentiment through the gamma exposure from the market makers, from the dealers, because they don't want to take any risk. They don't take any directional risk. So they use this information to hedge their positions, and when hedging their positions, eventually they will shake the market. Not, of course, again, it's not the only factor that shakes the market and makes Bitcoin price movement to happen, whether if they're going to be up or down. However, it's a very important factor because sometimes you think, why on earth are we here is stuck in this range since mid-November, and we got another very long range before that. Why are we here? And the explanation is here. I'm telling you the reason we are. It doesn't matter how back I go with these dates, these levels are pretty much the same. You can check it. On the past issues of the newsletter. Even here, if I go back, I don't know, to the 10th of December, you see, it's pretty much there. Now here's a good, it's a good comparison. You can see that February 26, we got the call, the gamma exposure centroid, the call 102. We were with the most recent data on about 100. So there are small variations for sure, but the overall sentiment it's pretty much the same. We were at that time a little bit more optimistic for the end of the year, which didn't materialize it, but the overall trend it's yet something optimistic. And from here we could see, while people were saying that, oh, now Bitcoin lost already 20 something percent, 30% from the all-time high, we are going to be down, we are going to go back to the 50K to 40K, whatever. And no, you idiot. You would not go anywhere below these levels because this is what the data is telling us. So don't be dramatic. Trust the data. It's not an opinion. It's not what I think. It's not an expert opinion. It's not what Michael Saylor says. It's not what an ETF inflow is telling. Whatever those things. They're noise, essentially. But here, it's actual data. And this is available on Deribit, for example, in the exchange. This is from where I pull the data from. What the difference is, I do analysis on the data, so I don't have to guess anything. I just have to do the interpretation about what the data is telling us, right? If we do another type of analysis, if we look to the supply and demand levels from volatility, now this is another beautiful indicator. It's an upfront information, meaning that in the beginning of every month you already have the expected levels of supply and demand, or resistance and support levels for that particular month. You can take a look on what has happened in the past. You can see that it's very accurate. It's an awesome indicator. And then the levels for December we have a very low volatility. They were 181, with the two standard deviations up being 109 and the two standard deviations down being 71. Meaning that if we have a very optimistic view, unlikely we would go any further than 109, or in a very pessimistic scenario, it was unlikely that we would go anywhere below this level over here. And then if in the case that it happens like November, it quickly gets back to the zones. Now, this is the monthly view. I am very curious to what is expected to happen when we change the year, when we have the reading for 2026. So let's check what to expect. If I go here to the weekly view, and here the chart gets updated daily, of course, with the new candles, but the levels are updated every new week. And you can see that for this week, meaning up to the next weekend, we have 90.6 or 85. Worst case scenario for this week, 82. And the most optimistic scenario, 93.5, essentially. With the volatility naturally converging to the mean, we already are back to the mean. Eventually, well, we got for quite a long time as well, for several months with very low volatility. So if we look from May to November, we were essentially around orbiting 110. So you see, Bitcoin can stay for quite a long time doing pretty much the same thing until something magical happens. And coming back to our options data, this is the reading from volatility, not from the options. So there is a paper I published about this indicator, which is also free. So it's here in the blog. You search for supply and demand, and you're gonna see the paper if you have a curiosity to read it. And if you want to implement yourself, you can do it. Just mention the source, meaning me and my company, and it's free of royalties. Now, coming back to the data, again, my friends, without further thinking, this is what to expect, right? This is what we have. This is what we have. Eventually, the year could be brighter, ceteris paribus, all things the same at the moment. We know the market's pretty dynamic, so eventually this is gonna change. Okay, if you have any questions, doubts, suggestions, just leave a comment. I am always available to teach and to help you guys. And visit the website, of course, it's for free. So you can check all of that information on a daily basis as well. Happy New Year. See you next time. Take care. Ciao, ciao.